Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. We're bringing the VRIC to you each and every week with our series of expert online panels. We have another great one lined up for you today. It's Chen Lin from chenpicks.com and Jeff Clark from thegoldadvisor.com. We are going to be discussing the silver sector today, both the metal and mining stocks. Gentlemen, welcome to the VRIC channel.
Thanks for having me, Jesse.
Thank you. Pleasure to be here, Jesse.
Yes, I've spoken with both of you on the channel previously, so very happy to get you both together to discuss silver. Let's start with a broad overview of the silver space. I'd love to hear your thoughts on the main trends and themes you're currently watching when it comes to silver. Chen, I'll start with you. And you mentioned off camera before we started that China has been buying silver, and that's going to play a role moving forward. So maybe you could talk about that and anything else you want to talk about from kind of a broad macro view when it comes to silver.
Right. First, a little bit micro view of China. Right. China right now is doing QE, is doing cash for clunker. It's kind of similar to 2009 in US and Canada. Okay, so they're coming out of a pretty sharp turn of the property market and trying to stabilize the property market and then hopefully moving up. So it's for China, the manufacturer, the housing market, the demand of that is the bottom, as you can see. Maybe go a little bit lower, but who knows? We will see that. But for the Chinese savers, we talk about that. You live in Beijing, you know that Chinese has a very high saving rate. So for them, they don't get much interest from the bank, right? In the US, we got 5.5%. Wow, they so feel jealous of us. And Canada probably similar, but then they're getting maybe 1%, if they're lucky. And so it's below inflation. So it's a negative real interest rate. So you think about 2009 was a great year for resource in the United States. So in the flip side, it's true. It will be the great resource for the Chinese investor. So we talk about a little bit, and I mentioned I did a presentation in September. China was buying gold, and then 4 months later, gold took off, right? So China was just buying a tremendous amount of gold. You can see the premium of that. And then in the beginning of this year, China was buying copper. You can see the huge surge of a Chinese investor. Okay, not the stupid government. I'm sorry, not the government, big government, but investors, smart investors, you and me, they were buying copper because the AI component increased by a few thousand%, I was told. So when I learned that, I said, cannot beat them, I joined them. So I quoted by copper in March. So far, so good. 2 months later, it seems to be a right trade. So now they're buying silver. They're buying massive amount of silver. There are all these premium, you can check. Shanghai is trading at premium to the US. And then the inventory of the Shanghai exchange in silver is going down like crazy. So it's very easy to be very bullish on silver. So my call is silver. I hope it's not a guarantee. Silver hit $50 in next month.
Very fascinating. And Jeff, your thoughts on silver hitting $50 next month, that call. Obviously, making predictions, we don't know exactly where the chips are going to fall. But how do you see silver's price action up ahead? And if you could also discuss the main drivers, the themes and trends you're watching overall when it comes to the silver space.
Well, Jesse, we have liftoff. Silver and gold have both ignited. They're pulling back now, but this is just the beginning. I have a high degree of confidence of that for many reasons, which includes the excellent research that Chen is pointing out. If you look at history, there are some very definitive periods where silver just breaks out and goes on a run. It has had numerous spikes since the 1970s, regardless of where the price may be, whether we're bull market, bear market, doesn't matter. There have been numerous spikes in the silver price. That's its DNA. So based on the recent price action, this is just the beginning. If this were the end, it wouldn't even measure as a spike all that much. So I do expect, based on history, again, that this will continue. The other reason I'm bullish on silver that this trend is going to continue is even in bull markets, you have numerous corrections. In the 2001 to 2011 bull market, there were 20 corrections in the silver price of 6% or more during a bull market. If you take out the big correction in 2008, the average silver correction was still over 10%. So there are numerous corrections. It's very normal to see corrections in a bull market. In the 1979 mania, there were 6 corrections in the silver price within a 13-month period of time, over greater of 6% or more. So it's very normal to see what we've seen recently. Now, yesterday and today, silver's breaking up, higher again. But this when I add all this up, regardless of what the fundamentals are, which to me are more important, but when I look at the price action, those factors tell me that we have liftoff and that this trend is going to continue. We are going to see higher silver prices.
And you mentioned multiple corrections there. I'm wondering for both of you when it comes to your buying strategy for both the metal itself and the mining stocks, and I do want to discuss the mining stocks kind of more in detail a little bit later. But first of all, is the game here to wait for dips and then to deploy capital? Do you dollar cost average? Do you buy in tranches? How do you approach that? And also, silver has broken $30, but when we look at it in real terms, it's still far below the previous high of I think it was late 2010, early 2011. What do you say to those people who are getting impatient? I kind of crammed 2 questions together there, but Jeff, I'll start with you on this one.
Well, the CPI adjusted, inflation adjusted number for the silver price today is about $75 US. So that tells you the kind of potential that we have. So, let's say Chen is right and silver's $50 next month or whenever. Once it breaks through 50, then we're going to be off to the races because there's nothing above it, on a chart. So I do think 75 is reasonable to expect. I'm not saying that's going to happen this year or anything. I'm saying that that's a reasonable target for us to put our eyes on. But for those that have been waiting, hey, look, I get it. I'm an investor too. I own silver stocks, so I get it. I understand. And it's true, gold will always be the king metal. But silver is the crazy cousin who is still been sleeping off the last binger, so, and now she's finally waking up. So this is what it does. It has the real spiky type of thing. In fact, if you look at the spikes I mentioned earlier, if you measure them, the average gain in a silver spike is 150.4%. If you take out the 1970s, it's still a double. So even on that basis, we're looking at $45, $50 in this current run. So that's what I'm looking at. The potential, obviously, is that silver has yet to catch up to its inflation-adjusted high. Gold's almost there, basically. It's already taken out its nominal high and then some. Silver obviously is not. It'd have to double to take it out, basically, almost. So I think that kind of underscores the potential. On a fundamental basis, silver is still money, and I'm still going to own it. I think the potential is greater there. And I think, as most of your viewers know, silver tends to outperform gold on a percentage return basis during these bull markets. It's happened every time. So I expect that potential to play out this time as well.
And for somebody new to the space, do you think it makes sense to wait for pullbacks in the price before deploying capital? Or do you think it doesn't make sense to try to perform this sort of timing the market and just dollar cost average your way in or buy in larger quantities? What's your thoughts?
Well, it depends on how you view silver. If you view silver as gold, that it's a money, then if you don't own any, the answer to that is very simple. You buy some. The more you own, the more picky you can be about the price. And so you look for dips and pullbacks and that sort of thing. And I would encourage people in this environment to make sure they own physical silver that's within your grasp. Maybe not stored in your home, maybe you do, but you want it to have it, readily accessible to you if banks shut down, if we get another 2008, if we get another, period where there's some type of monetary reset. That's the big bugaboo, because then, the water goes out and we can see who's swimming naked. And some of these funds, buying futures contracts, or they don't have the metal, they make promises on paper. You have counterparty risk with all of that when you buy a fund. So I don't do that. But yeah, I would obviously buy in tranches. That's what we recommend. How much you own depends on the strategy that you might take. But yeah, add in tranches until you have the amount that makes a material difference to your portfolio.
And Chen, what do you say? Because if an investor comes to you, for example, and says, silver's, it's done nothing for a very long time. If we look at it in real terms, why don't I just invest in Nvidia? This thing continues to rip to all-time highs. These tech stocks, this is the era of the magnificent, what is it, 5 now? I don't think it's 7 anymore. Why should I hold physical silver? Why should I be looking at the mining stocks? Well, what would you say to them?
Yeah, that's good. I mean, you should own both. I mean, I don't, I'm opposite with some people and think, the tech will crash. I actually, on my recent presentation, I was talking about AI will be the future of human race. Okay, so this, I mean, if you listen to some interview, even United States General on the interview saying that future battle will be fought by the drone and robot powered by AI. So AI is such a critical part. So you feel free to buy NVIDIA. That's not what I'm looking at. I'm just saying that because of the technology advance, especially because of the artificial intelligence, we are having a power shortage right now. Right now in Texas, we have power rate. You see electricity rate jump by 100-fold from time to time, 100-fold. It's not even summer yet. We are facing a rolling blackout in the election year. So a lot of things can happen. Okay, so I thought, well, that's a setup for this. So I'm not against technology, but I think technology need power. Technology need a solar panel. So if you look at the fundamental of silver, the solar panel actually become the deficit, can make the silver huge deficit year after year. I just make a presentation case that our Silver Institute, their recent prediction was not accurate again. They were wrong almost every year because they're behind the curve. But for those Chinese investors, they can see, they have more accurate data, as I show them. So they can see the huge deficit coming. And this year could be easily 300 million deficit. Worldwide production is 1 billion. Next year it could be 500 million. You see Microsoft, they're first into AI. They already start making huge investment in solar panel. That's their first investment, $10 billion. I think that's probably not the only one. There will be more coming. They could be from Google, from other. I mean, you look at the silver deficit, this kind of 100 million ounce deficit, you cannot see it in the history until the 1950s. So its fundamental is very, very strong for silver. Okay, so that's one of the key reason when the Chinese on the other side of the earth is buying silver hand over fist. And for the new investor coming to silver, I think if we look back, if next year or year if you look back, you will see the price is very cheap. I mean, $30 silver is unbelievably cheap because most of the miners, their cost base, if you look at all the others, right, they are not making a lot of money. They're making some money at $30, $20, they're not making money. They have been, silver mostly is byproduct. And then they have been, mining copper, mining zinc, and then they just dump silver to the open market as if there was nothing, right? For them, it's a byproduct. So silver price has been depressed for decades. And then now we finally have this opportunity. The solar panel absorb all this excess silver, and then the silver is in a tight market. So once people see that, once people see Google or Amazon or Tesla get into solar panel, people can calculate. So I just did the interview. We said potentially it could be 500 million deficit, potentially. Okay, not sure, but you need to follow You need to follow the news. You see Google, what the other they do. So it's very, very exciting. So of course, there's always up and down market. But the silver market in the past 50 years never been to like this kind of deficit. So if there's any dip, just grab it. So you see, so far the silver has been very predictable. It broke out the $26 key resistance, right? Go to 30 and then retest 30, and then broke 30 and retest 30 almost to the penny. So actually I have an order at 30.1, but they went to 30. I ordered 30.01, but they went to 30.1. Actually, I didn't miss my order, but I still, I hope I want a lot of silver position, both mining and future. Actually, I'm doing in the future. I'm a little bit different, maybe than Jeff is. There is counterparty risk for the other bank, but right now every bank almost guaranteed by our taxpayer, by the government of the United States. So they would not like any bank to go under right now, seems after the email. So it's a risk. Of course, there's risk, but it's relatively easy for me to trade. So I have a future position. I have a stock. I have options, core options on future for the silver ETF. If you have any dip, just buy it. I think $30 is very, very cheap. I'm just writing an article. Actually, my target is a little bit higher than Jeff's. I think it's go to 100. So if you look in the past, last time silver spiked from $30 to $50 only a few weeks. That's why I feel like we have a very decent shot to squeeze silver next month. So we already saw copper squeeze a few weeks ago, and then there's an aluminum squeeze last week, and it seems like there is a squeeze on different metal every few weeks. It's a little bit like the Reddit movement. So I hope, no guarantee, it come to silver next month, and then we see $50 silver.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
Well, you mentioned silver's use in solar panels there. It's obviously used massively in industry, more than people understand. It's actually one of the most used industrial commodities in the world. However, a lot of people are pointing out that they believe silver is losing its role as money and becoming far more of an industrial commodity. It often tracks copper closer than it tracks gold. That's something that Lobo Tigre has pointed out several times. So I'm wondering, in both of your views, is silver still money or more of an industrial commodity at this point? And Jeff, I'll start with you.
Well, it's true. It is the percentage of use of silver is moving slowly more toward industrial use. That's very clear that is happening. But that doesn't mean we're there, that it's solely an industrial metal right now. I liken it to a barge in a port that is trying to negotiate a 3-point turnaround and go the other direction. That's going to take a lot of time. That's how you can view this move toward more industrial use, and that's supported by the green energy movement, et cetera, et cetera. So that's happening, but it's a very slow-moving trend. In the meantime, the price, the monetary issues, is like a jet ski whipping around the waves around that barge. It can happen very quick and very fast and be dramatic. So again, silver is actually outperforming gold right now in this trend since that began on leap year day, February 29th. So just to let you know, Jesse, silver is up 40.7% as of yesterday's close since February 29th. So basically in 3 months, that's how it's performed. Gold is up 15.5% as of yesterday's close in the same time period. So it's clearly outperforming gold, for a number of reasons. It's a small market, that sort of thing. So I expect that trend to continue, and I expect that to continue to happen. So yes, it's moving more toward industrial use, but its price behavior is still going to act and respond to any monetary issues, and that's what we're kind of seeing right now. And so I expect that trend to continue, meaning I expect silver to continue to outperform gold.
And Chen, central banks around the world are not accumulating silver. The Bank of International Settlements has not classified silver as a tier 1 asset. Is it still money in this day and age?
Silver used to be in the history, both in China and United States. We all have a huge silver stockpile. In the past few decades, silver started losing its monetary status. Okay, so and then as I said, there's a lot of, because silver is a byproduct from copper and zinc, so the miner just dump it to the market. That's actually suppressed silver for the past decades. For silver to have a chance to become a monetary asset again, silver needs to be more expensive. Okay, so I think the $30 is still too cheap. If it's silver $100, more people will appreciate that. So it's a higher chance to become monetary metal again. But we are right now in a perfect situation. Silver is the best conductor. Silver is the best transmitter for the heat, and they use in solar panel. So far, nobody can replace that. And then the solar panel is exploding the faster than anybody can thought about. And with all this AI revolution, the demand of silver industrial demand of silver, I expect to explode. That's actually served as a central bank. I think there's an analogy by one of another poster, I forgot his name. So he said, the solar panel is acting like a central bank to gold. Okay, they basically absorb all the excess supply, which is a great point. So it's taking that out, and silver become rarer and rarer. Hopefully, price will go higher and higher. Then people think about silver as precious metal.
That's very interesting. The solar panel industry is like the central banks for gold, for silver. That's something interesting to think about. I do want to touch on mining stocks now. Do you think they present an opportunity at the moment? What are your thoughts on the sector? Obviously, there's such a smaller handful of silver names, pure play silver miners, when we compare it to the gold mining sector, for example. Where do you think the most value currently lies? Is it in the explorers, developers, producers? Where are you currently looking for value in the silver space? And Chen, I'll start with you on this one.
I have, since I was bullish on silver, so I would have myself positioned in a lot of producers and mid cap and juniors. Big cap already moved a lot. Actually, getting closer and closer to my target, frankly. So they're doing well. The small cap, the value is in junior. I just talked to a fund manager before I came on the show. The fund for the junior mining still have no inflow. That means there's a handful of liquidity just going to that. So I think there's a lot of opportunity in small miner. They're trading at huge discount to producer. You can have a small producer or exploration company. The valuation, similar to both producing silver versus big producer, you can see almost 5 to 10 times value gap. So I think there is a huge value gap. They probably lead to more M&A. And then right now we are in the initial stage of the bull market. So money mostly come to ETF, not outside money come to the junior sectors. I actually make a junior sector very, very interesting. So there's just a lot of exciting opportunity out there.
So would you say the train has kind of already left the station when it comes to the big producers then? You said that a lot of them are getting close to your target. Is there still any opportunity there, or would you be more tempted at this point in time to be looking to the junior sector as you outlined?
Oh, that's a very good question. The big producers still have room. You have to assume long-term silver price higher and higher. So some almost doubled. I mean, I have a silver press. I have quite a few very good big silver company. I'm very satisfied with the performance. They may go up another 50%, I say, but it's. But I'm very happy we're satisfied. I mean, put it this way. But I think the valuation, the junior had to make this type of move. Plus, junior has more leverage. So I see the opportunity more in the smaller cap right now. But I do like big cap. I'm still holding. Okay,
Yeah.
I'm not selling.
And Jeff, your thoughts on?
If you sell,
sorry, go ahead.
silver
Chen,
go to 50. I'm sorry, just add. If silver hit 50, it should be a, I mean, resistance junction may stay there a little bit. Then you can sell them the silver producer. That's my plan next month.
Yeah, let's hope for next month. Jeff, your thoughts on the silver mining space, where it is that you're currently seeing value in the sector?
I mean, I own a couple producers, Silvercrest Metals, First Majestic Silver, but my focus is further down the ladder. Some of the producers have moved and some of the juniors have not. And so, the fuse is lit. Once the producers move, then it'll go down to the developers, then it'll go to the juniors. Same is true with the gold market. So I think that has yet to happen. And so there's still perhaps, in my opinion, better value further down the ladder right now. And the reason I like them so much is in the 1970s, the average return for a silver junior was over 2,300%, 23x on your money. From 2001 to 2011, that bull market, the average silver stock gained 1,600%. Then it crashed 79%, and then it gained 845% after the 08 crash. So there's a lot of potential there, and we're nowhere near, like Chen said, these juniors moving anywhere like that. So these things are going to wake up, especially if Chen's right and silver's going to 50 next month. I mean, that's a major catalyst, and I do think these will exercise a lot of leverage. I think the main ones you want to own, I like the advanced explorers, Dolly Varden, Hercules Silver, Vizsla Silver, and hot off the press, just announced this morning, was Eric Sprott just bought another 3 million shares of Suma Silver, one of my biggest overweight silver positions. He spent 1.2 million. He owns about 19% of the company now. So that's a great speculation on my part. I like them a lot. And there's going to be others. We'll have a new pick next month in Pay Dirt Prospector, but I think you do have to invest in some of the new names as well, and not just hold on to the same old names. Those are good. They'll be fine, but I think you do need to invest in some of the new names as well, because some of the newer names may see the biggest gains. Actually, history shows some of that. So you do want to have some rotation going on. So that's what I'm focused on.
And then I'd like to get both of your thoughts. Jeff, I've spoken to you about this before, and I think I know your view, but I'd like to hear it reiterated. I'm very, very curious to hear what you have to say, Chen, and that is on jurisdictional risk, because we're seeing Mexico potentially banning open pit mining. The next president of Mexico could be very anti-mining in general. Bringing up Lobo Tigre again, he says that, they start with open pit mining, but then you can't say, oh, well, they're not going to touch underground mining because they're already headed in that direction. We've seen a lot of jurisdictional risk around the world when it comes to a variety of commodities. The Cobre Panama mine for copper comes to mind. The coup in Niger for uranium comes to mind. How do you both look at jurisdictional risk? Do you kind of combat that by diversifying across a lot of different jurisdictions? Do you stick to jurisdictions that are known for adhering to the so-called rule of law, places like Canada and certain states in the United States, et cetera? Although Rick Rule has said he's lost the most money investing in those sorts of jurisdictions. But
Right.
I'd love to get your thoughts there. And Chen, I'll start with you on this one.
Yeah, that's a very good question. So for jurisdiction, you have to diversify. There's just no set rule. If you want to stick your head out of the US and Canada. But US, Canada has its own problem. So you want to make sure it's high grade, it's profitable, because a lot of the mines, they are expensive to operate. Put it this way, the labor is cost much higher in the US and Canada versus Mexico or Peru. So there always jurisdiction risk. So you want to be very careful. Okay, so they're also on the other side of that. Yeah, we just talked about Serbia, and then the Chinese, they came to Serbia. So there's certain countries that the other side Chinese like to buy, like Africa, like Serbia, like in certain part of the world. So it's what do I say? It's different for different people, from different company. So that's opened up a lot of opportunity. I mean, my rule of thumb is you have a good deposit, world-class deposit, and then if it's in a safe jurisdiction, you can hold on longer. If it's not safe, if it go up like a 10, 20 fold, hopefully, then you need to take some off, right? So then you play with the house money.
Yeah, that makes a lot of sense. Jeff, what's your approach when it comes to jurisdictional risk?
Well, when I hear about a drill result and I don't know the company, the first questions I'm asking are, well, who's behind it and where is it? As junior mining investors or mining investors in general, we are speculators. We're in one of the most risky sectors in the world, you know. So why do I want to take that level of risk and add political risk to it? That's my view. I've been burned on political risk in the past, and I refuse to let that happen to me again. Now, I will miss some, big flyers, perhaps from maybe, let's say, West Africa or something. I don't know. But my overall risk is going to be lower because I'm focusing on pro-mining jurisdictions. With Mexico, that's really a gray area right now. Who knows what's going to happen? But here's a question for you. How many mining regulations did AMLO change, the current president? The answer is zero. It was all rhetoric. It was scare. He was speaking to his constituency like every politician does. So nothing was really changed. The scare was that they would ban open pit mining. So that scared a lot of money away from all Mexico plays. But it's true, underground has not been touched. But the point of all this is that, I think once they get in office, they realize not only how hard it is to change those rules, but that they may not want to do it because mining is a significant chunk of their GDP. It's very important to their GDP. So I think once they get in office and realize that, and politicians always need money, they realize a lot of their revenue is coming from that. Sometimes they change their tune. Now, the Claudia that's probably going to get elected there next week. She's like AMLO. She's anti-mining, but we'll see what she actually does. If you own Mexico shares, or let's say what I'm doing, I do own some Mexico plays. They would all be underground mines. So I'm not selling those because of what might happen. I already own them. But I would shy away from something that is an open pit consideration. But the Fraser Institute survey just came out, mining survey. That's a great starting point for people to look at, consider political risk. And the top jurisdiction in the world wasn't Nevada, it wasn't Quebec, it was actually Utah. I was surprised to see that. So, there are places that are very pro-mining and supportive, have a rule of law, are stable and aren't going to change the rules on you because of some whim of a politician. And those are the ones that I personally want to focus on. And that's what I'll be doing is focusing on pro-mining jurisdictions.
Awesome. Great advice from both of you. Now, before I do let you go, I just want to touch on any other commodities you're currently watching, you're currently bullish on. Chen, you were talking about copper before we hit record here, and you also discussed it a little bit over the course of the conversation. Jeff, I believe you're bullish on uranium. Maybe you could both talk about those and any other commodities you currently see value in. Chen, I'll start with you here.
Right, yeah, right now I am silver, copper, gold. Yeah, that's my top. I also have others. The copper I just start picking up in March. Good, so far so good. Timing is good. I'm looking for a new high, and I put it on record. I hope copper hits $6. I will take profit and my future position, and $7. Hopefully $7. I will take position, take out some producer position. The thing is, it's in the bull market, it's very hard. People ask me, do silver copper go to 10? I do not know. It's just like when silver breaks 50, I don't know how high it will go. My intuition say maybe 100. Maybe Jeff is right and 75. Who knows? So when copper breaks new high, it's very hard to predict how high to go. But I can kind of see it probably will happen in the next 12 months or so. Okay, that's made on copper. The gold, I love gold. Put it this way, I've been heavily into gold, and last year I saw the huge premium in China. And it happened 4 months later. So I'm happily riding my gold miner. I think gold can go very, very high with current geopolitics. So recently, as Jeff said, that there always some correction. Gold hit 2,400 and then dropped to 23. But if you notice, China buying every month, but 2,400 they bought a little bit, tiny little bit, just the lowest they can just symbolically buying. But 23 they were buying a lot. So you can feel like there is someone just buying on every dip, as Jeff was saying. So central bank would love to buy more gold. So I think even Korea central bank start thinking to buy gold now. So there's more and more people realize the value of gold. I think gold a lot higher. I'm very excited about that. Maybe 3, maybe 5,000. How about you, Jeff?
Yeah, I think eventually it probably is going to 5,000, but I'm of the opinion that I don't want it to go to 10,000 because of what that would mean. That would mean the world is a pretty ugly place. That 3 to 5,000 range, that's a good sweet spot for me.
And any other commodities that you're bullish on at the moment, Jeff?
You have to be bullish on gold if you're a mining stock speculator. I really think you need to own some gold mining stocks. I have a ton of them. I think I'm also bullish on copper, like Chen has been, own some copper plays. There's some lithium plays out there that I think are very interesting. And again, I'm focused on the stock and the mining company and what they could do as opposed to just what the lithium price might be doing. And then I do own uranium. I think you need to have some uranium exposure. That's a bull market that's already underway. Serious supply demand issues there, political issues, environmental issues, green energy movement. I mean, all of that is supportive of uranium. And so we do own a fair amount of uranium stocks in the portfolio as well.
Great.
Well,
Well,
excellent point.
Yeah.
Yeah, I have a little bit of uranium too. I think it's a supply demand. This is a really good setup. Actually, I think uranium will lead the way for silver. So I own uranium, and I think it's the supply demand imbalance will also reflect the silver price, which goes much higher. Maybe you're right, 75 or 100.
Excellent. Yeah, my portfolio is like over 40% uranium stocks. I might be a little too heavy there, but something I'm very bullish on as well. Gentlemen, it's been a fantastic conversation. For those who want to learn more, Jeff, tell us about the PayDirt Prospector and the goldadvisor.com.
Sure. Well, we always talk about M&A in the mining sector and how that can heat up and drive some interest. Well, we have M&A in the newsletter writer sector for the mining industry. Gwen Preston, as you might have heard of Resource Maven, decided to move on to something else. So we purchased her subscriber list, so they're all coming over to us. So a little M&A in the sector never hurt. But we have the Gold Advisor, the free site, and then we have PayDirt, the book, and then we have PayDirt Prospector. That's the paid newsletter where all of our more advanced speculations are. So I'm having a lot of fun. I got to be honest. I wake up every morning. I love what I do, and I wake up every morning and can't wait to see what I'm going to be talking about. So maybe tomorrow I have to talk about what Chen's been saying.
Awesome. Well, I will put a link in the description below to the goldadvisor.com where people can find all that. Chen, tell us about Chen's Picks, what it is you do there, where people can find it.
Yeah, first I want to congratulate Jeff for taking over the Gwen's business. You are going to be the superstar in the newsletter period. You know, you are the new Gwen or Gwen plus Jeff. That's great.
Hey, maybe you're next, Chen. You know, maybe you're next, Chen. Who knows?
I'm just happy with my set of room, and we share our ideas for a long time, Jeff. And I run my family business. I run my family investment first. Okay, I also write a newsletter on the side, tell what I invest. I not only just invest in mining, I also invest in energy. I also invest by biotech and different sectors. And so I write a small newsletter compare with Jeff now Jeff plus Win, the huge conglomerate. So yeah, you can check out chenpicks.com.
Great. Well, I'll put a link to chenpicks.com in the description as well. Awesome conversation, guys. Thank you so much for coming on the show.
Thanks for having me, Jesse.
Thank you. Nice to be here, Jesse.